Bought Pashupati Advani, find out what he's making of the market right now. Pashupati, hi, afternoon. What are you making of the recent correction? Would you say it's lasted longer than one would have wanted, or do you think there would be some more ease off in the market before we see any recovery?
So actually, what I've seen is the market has come down, uh, quite a bit. And what has actually happened is, somebody sent me a list of the 1,000 non-performers. Lots of good names, lots of household names were in that list, and they've gone down as far as 75%, and some of them as little as 30%. But they've all been hurt. And I think what's happened in this is that the people are sort of having to come to terms with having to take losses. And what happens in a bull market is you forget how to take losses. And then when the stock goes down, you don't sell, and then you just take it till you're hurting. And I think that's what's the phase that we're going through right now. So, and part and parcel of that is that the banks are also getting tougher in lending against shares, finance companies also. So generally, it's not a good scene. Outside the exchanges. In the exchanges, the good stocks, the Sensex and Nifty seem to be doing okay, but the mid caps and small caps are getting, should I say, a little kicked around.
Right.
Aisha?
Right. So that's the way how the markets are looking like at this point in time. But there have been select pockets which have been really hurt or burnt in this entire carnage that we've actually seen when we talk about broader markets. And one of the sectors that has actually been beaten down of the last for a few months has to be the entire PSU space, be it defense, be it railways, be it power. All of these star performers or the narrative stocks have now actually seen a sizable amount of correction, Pashupati. Do you think now is the time that you can't look at these space because the valuations may have cooled off from those elevated levels?
Well, again, these are the ones that I expect to turn first. The government is committed to spending, and they're spending the money to basically in the hope that it will stimulate the economy as well. So I think that these are the ones that actually should turn around. But I'm not seeing any trigger yet. The government's not jumping up and down on a table saying we're putting 1,000 crores here, 15,000 crores here, 1,500 crores here. So they're still being a little bit quiet in what they're doing because, again, they have decided to give money now to the consumers, and they're hoping the consumers will pump into the economy rather than the PSUs, which was last year's story. So I think it's, it is time, but we're seeing the numbers, and the challenge came, I think, sometime in the last quarter, in the month of January, when they declared the December numbers, where they actually started showing negative earnings from expectation, and also negative earnings from the year before. And I think that was like a kind of a trigger that our market is, quote unquote, a little overvalued and a little overheated.
But Pashupati, where would you think that the recent correction has been fair, and now the valuations have come to the right, sort of levels?
It's very difficult to tell. Somebody says, let's look at an individual stock. And you say, okay, look at the market. The overall market is down 26%. Your stock is down 33%. Is this the right time? Maybe. I think if you have money, it's definitely worth nibbling. But I would say that very few people at this point in time have money. And that's then again, reflecting into the real estate market, into consumption in general. And you're seeing, certainly you're seeing slowing down in purchases of four-wheelers and some two-wheelers also. So all that stuff is going to be, but at the top end of the market, things seem to be robust. So super luxury goods, super luxury real estate is still flying out the door. So, it's a fun country, but, that's why we all live here.
How would you correlate that super luxury lifestyle to Indian stocks then? And let's talk about real estate. That's the first thing that's coming to my mind right now within the listed universe. Would you add to positions anywhere over there?
See, that again, the real estate players are getting some movement at the top end of the market. The bottom end is still very sluggish, but you're seeing trades of 50 crores, 60 crores, big apartments. So I think that is giving them liquidity and also giving them some kind of an ego boost. And you're seeing that even in a market which is basically flat, these stocks are trying to push up 0.5%, 1%, and people are looking at them. And again, when we recover, these are the stocks to be in, whether you're in real estate, whether you're in cement, whether you're in steel, whether you're in infrastructure. those are the stocks that people are going to buy. And I think that one has to try and jump on that bandwagon. Timing is going to be very difficult, but let's see.
Right, timing always is very difficult, isn't it, Kunal? And I think a lot of them must be trying to time the bottom of the market, and that's something. It's a futile exercise year after year or day after day, isn't it?
Yeah, of course. I mean, after such kind of a carnage, it doesn't make sense to try and look for the exact bottom level. I think what we typically do is wait for confirmation rather than anticipation when the market turns around. So we wait for signals, whether we wait for sector trends to pick up. Because every new trend for the indices, whether it's a smaller rally or a recovery, like for example the recent 1,000-point recovery for the index, it's always led by some bit of patterns emerging from sectors as well as from individual stocks. All you need to do is just spot those patterns, and that would probably help you maybe time those sectors if timing is something to go by. But then when you see many sectors starting to show signs of confirmation of turnaround as well as large cap stocks, so we see a classical built up of long built up and then short covering. When we see a classic mix of that happening, that also gives an indication that the markets could be nearing a base formation, and that could be a good time to sort of enter into these spaces.
Are there any sectors such as those which you think are on the brink of a turnaround?
So I think banking, financial services, of course, yes, that's one pocket which I'm looking at very closely. There are select few auto stocks which are also looking fairly attractive. So not just the likes of Maruti as well as I think M&M, which have been doing reasonably well, but you also see some recovery which has come back into Ashok Leyland. That stock is looking quite charged up. That's a stock which I would probably be looking out for in terms of a potential at least a 15 to 20% upside over the near to medium term. There are a few fertilizer stocks like Coromandel fertilizers, Chambal fertilizers, which have been looking very charged up. So not the strongest sectors which have a higher proportion on the index, higher weightage on the indices, but there are those individual pockets where there seems to be a lot of strength.
All right, so there are some sort of pockets where you are seeing strength right now in the market. Naresh, let me come to you actually and get your view on a particular sector that somehow may have fallen least when you compare it to the rest of the market. It would be the IT pack. What's your view on the IT pack right now, and would it be the mid or the small, large cap IT players that look good, look attractive?
So would focus on the large caps. A lot of mid caps have very different charts. You have some companies which outperformed massively over the last 1 year, and there are some which are still struggling 30% down from the 2021 highs. So the names which continue to look interesting is Infosys, which has been in a tight range, 1750 on the downside, 2000 on the upside for the last 6-8 months. Again, on a dip, that remains a buy. That could be the stock which could structurally break out in the IT pack. Similarly, TCS back to 3800, 3700 would be a good buying opportunity. And that would make it the stock to be at the same price back in 2021. So both these names over a 3-year period, the return is zero, but are now starting to make a base for a slow and steady rally from here on possibly.
Right, okay, just looking at a couple of other buzzers there, while of course names like a Policy Bazaar, M&M, Supreme Industries are all down, you're also seeing some weakness build in for an LTTS, for instance, right now. There's a Deepak Nitrite that also is, a little down about almost 1% or so. There's also some weakness coming in on other names. Let's just bring out the list of losers from within the Nifty itself. There's also Bharti, which is now down a good 2% as we speak. Infosys, ICICI Bank, BEL, Axis. These are also significantly weighed down. But Kunal, you were talking about comfort within banks and financial services. What would you buy?
So I would look at the relatively stronger names. So far, Kotak Bank, IndusInd Bank, relatively in terms of price, they are the ones which are very strong. HDFC Bank has been more or less flattish. I think if you can look at the last maybe 2-3 weeks of the price trends, start of 2025, then I think when you look at this comparatively, you have few odd private sector banking names like IDFC First Bank. That's a stock which has shown recovery from I think 54 or 55 was the low for IDFC First Bank, and the stock has recovered some 10% from its lows. So there are those few, very few pockets on large cap banking names which are showing signs of strength. If I can club it with the financial services pocket, then I think Bajaj Finance, Finserv are the ones which are very strong. There is a very strong potential recovery which I would probably look at M&M Finance. That's a chart which has come back or is on the verge of a comeback above the 200-day moving average. And then the two stronger names of 2023-24, Chola Finance as well as Shriram Finance. I think these are the few pockets where I would believe that there is a lot of strength.
All right, some of the financial names where you are actually seeing strength when you talk about the technicals. Pashupati, let me come to you and ask your views then on the financial space, because you would ask any of the experts and everyone's betting the fact that it will be financials that will lead the market recovery. It is going to be the financial space that is a safe pocket to look for investment at this point in time. Are you also of the similar view?
Actually, I have a contrary view in this because I actually think that the second tier financials and some of the NBFCs are going to get pretty hard hit, whereas the solid private sector banks are going to watch people sort of drop off. So, in that we'll have HDFC Bank and Kotak Bank, holding the center. PSU banks, again, SBI is there to stay. It's not going anywhere. Some of the other government banks will have some pressures, again, because of some slackness in their lending policies, whether it's to NBFCs or it's to directly to the public. The good thing is that gold prices continue to go up. So those banks and NBFCs that are in the gold lending business are certainly more secure than they thought they were. They thought they would be, and so let's see. But even though the dollar is getting stronger versus the rupee, I'm not particularly bullish on IT because I think that AI is going to replace some of the jobs that we have there, and hopefully they're going to come to India, but I haven't seen it yet. And I also am not so bullish on the banking sector generally. So those are my thoughts.
Why is that? Not bullish on banks, Pashupati? If you could just elaborate on your thoughts.
So my thought on banks is that I think this budget has actually made some policy changes that will allow people to reschedule and kick the can down the market further down the road. I think that in the second tier and the smaller NBFCs, there are a lot of issues, there are a lot of non-performing loans, and it'll take that much time for them to surface. In the meantime, the spread on those loans is very high, so hopefully it'll all sort itself out. But we are having some challenges in trying to collect. Somebody borrows against a scooter, the scooter vanishes. What do you do? So low-value items that are getting financed, and that's a big, big market place, and it's also what the government wants because they want consumption. And but in that consumption, there's bad consumption from people who don't intend to pay back. So that's the worry that I have. It's like a sword, but I may be wrong on this.
Really interesting take coming from you, Pashupati, given the fact that I think you would be one of those players in this particular theme, that is financials, because everyone who we've asked of the view that the financials will make a comeback and that would be a most attractive space to look at. We've got a great take from you coming in on the financial space, particularly banks, and also we got the moves coming in on the charts as well. But Naresh, let me come to you and talk about consumer discretionary space, where everyone's of the view that now, hopefully in the next 2 to 3 quarters, once the spending power comes back, these counters will see good up move. But on the charts, how is the consumer discretionary space looking to you? Because it was pretty charged up after the budget.
So post the budget, we've seen a good enough correction across that space as well. We've seen a 20, say, even if we were to look at a Voltas, the stock had rallied from, say, 1,050, 1,100 levels in this financial year all the way to 1,900, and now the stock is back to 1,200. So looks like an interesting space going forward. One has choices across the board, whether it is a Crompton consumer. Every name has taken a good 30% hit from the top. So I think Voltas could be an interesting bet going forward.
So Pashupati, want to circle back to you. Not banks, not IT. Where is it that you've bought at all in the recent correction, if you have?
So the place to be, unfortunately, is where the government is putting its money. We have to follow, and we have to be in, the same boring stocks, which are infrastructure, to some extent cement, to some extent, some of the other metals. That's where we want to be, and I think that's going to still continue to lead our economy. I'm not talking about the market. I'm talking about the economy, and then the market, according to me, will follow really robustly once people get it. So I think those are the sectors to be in, and it's tough and it's been painful, but I think those are the ones that will turn, and those are the ones which will lead finally.
Given the cyclicality, at least when it comes to the commodity, sectors, But where within infra, metals and cement do you think there's opportunity?
I think all of them, they've all got work. They've all got more work than they want. Most of the infra companies are sort of getting their act together and deciding which jobs they want to do, and they're doing the ones that suit them the best. And I think that's very, very important, because then they're going to clean up their balance sheets. The challenge is when you're in the EPC business, you never know what's actually making you money, and you're on a treadmill until you stop. But I think that some of the more seasoned players, and in that you'd put, people like L&T and some of the others that are at the top of the pack have got their act together, and even second-tier players. I've mentioned, I think, in the past that I've looked at a company like J. Kumar's, which has also done very well and is continuing to be an eyesore, at least in Bombay, but they are doing work. So I think that's the main thing. So those are the kinds of companies that you want to invest in, the big ones that are doing the work, that are going to deliver and are in our face, if you want to call it.
Right, interesting one. Once again, Pashupati, and given the fact that you are in the camp which would be Build India and Consume India camp, isn't it? To put it short. Yes.
Yeah, absolutely. We have to watch it build, enjoy it getting built. And listen, we live in Bombay. You're watching the coastal road and what it's meant to our lives. It certainly made a big difference to mine and a lot of other people that I know.
Oh yeah, absolutely. It really has.
And I think they should open it at night, which they're not doing yet, because there's rumors of Lamborghinis having races on the ceiling.
Yeah, not just at night, but that happens early in the morning also, when some of us commute in the ceiling. But
if you like this video, then like, share and subscribe to ET Now.